Good morning all. My name is Suthirat Hongthong, Society Manager of CFA Society Thailand. I would like to welcome you to CFA Institute Research Challenge in Thailand 2021 to 2022. The Research Challenge is a global equity research competition among teams of students organized by CFA Institute. There are more than 1,000 universities from around the world participating each year. For the local level this year, we arranged the competition with Osotspa Public Company Limited as a subject company. At the end of today, we will select the best team who will represent our CFA Society Thailand to compete with other teams in regional and global rounds. Due to social distancing requirements during COVID-19 pandemic, we have limited our participants on site, and our event today will be live on CFA Society Thailand and CFA Institute Research Challenge Facebook page. On behalf of CFA Society Thailand, we will not be able to make this event happen without our main sponsor, including Kiatnakin Phatra, Securities Public Company Limited, the Stock Exchange of Thailand, Bloomberg, and Kaplan Schweser for their kind support. Next, our Research Challenge organizer and moderator will go over the rules and introduce you to our judge. Please welcome Kun Marsh Mavi Robanjert.
Thank you, Khap. Good morning, judges, professors, CFA board members, volunteers, and our guests. I am Mavi Robanjert, the organizers of this year's CFA Research Challenge and your moderators for today's event. This year's 14 teams from 11 universities participated in our programs, but only 4 teams who got the highest scores in their research report and presentations in the semi-final rounds who advanced to the final round. We are looking for not only a good writer, but also a team who has the ability to present their ideas to the audience, answer to the challenging questions, and representing us in the regionals and hopefully the final global round. The format of our local round is similar to the regional ones. The final 4 teams will be presenting their analysis to our panel of judges, who will give them a scores. And the team who get the highest presentation score will be the winners and representing the CFA Society of Thailand in the regional round. Before we start, I would like to introduce you to our honorable judges who are highly respected financial professionals in Thailand. First one, Dr. Andrew Stott, CFA, the CEO of A Stott Investment Research and former president of CFA Society Thailand. Second, Kun Orsen Karnborisut, CFA, the investment directors of Aberdeen Asset Management Thailand. And last but not least, Kun Pacharachai Puthi Kun Sathit, CFA, the senior investment analyst at NT Asset. They are all volunteering their valuable time to our event today. Thank you so much. So now, let's go over the rules for the presentations. Each team will get a total of 10 minutes for the presentations and another 10 minutes for the Q&A sessions. When there is 1 minute left, the team will be seeing this side and another side when the time is up. And same rule also apply to the Q&A sessions. We will call each team by its assigned numbers, not the university name, to ensure the unbiased judgment. We want to ask all participants not to reveal any signs that indicate university name while the team is presenting. Also, in order to avoid the distractions to the presenters and judges, we would like to ask your cooperations to please be quiet during the presentations and keep the walking in and out of this room at minimum. Also, please turn off your mobile phones. ขออนุญาตย้ำอีกครั้งนะครับว่าขอความกรุณาปิดโทรศัพท์มือถือและขอความร่วมมือพยายามไม่เดินเข้าออกห้องนี้ระหว่างที่มีการพรีเซนต์นะครับ So now it is about the time for the first presentations. We would like to ask all teams to leave this room first, except for Team A. After finishing your presentations and Q&A sessions, you are welcome to stay and watch the other presentations. So now, let's begin with our first team, Team A ครับ
Test.
Okay, you can start whenever you are ready, and we will start the time when you begin the presentations.
Good morning from Team A. We are pleased to offer you a buy recommendation for OSP with a 12-month target price of 38.75 baht, representing a 15% upside. This derived from two methodologies, including free cash flow to firm and dividend discounted model. OSP is set to reap more for the forthcoming time to replace the intrinsic value beyond market appreciation. From first, internal strength is OSP in capturing the market. Second, the competitive edge from facility in Myanmar are ready to increase market share. And lastly, the cost leaning program that poises to boost margin to new height. Let's begin with a brief business overview. OSP principally works in four sectors, which is mainly focused on energy and functional beverage. For the rest, personal care and other revenue that comprise of confectionery, OEM, and supply chain management are shared a similar portion. Not only has OSP operated on a domestic level, but also exported to over 33 countries worldwide. OSP primarily focused on Thailand and the CMV regions, where it performed as market leader in Thailand, Myanmar, and Laos, with a combined total portfolio income of over 95%. And Napat will now elaborate more for our investment thesis.
Favorable trend. OSP strength in capturing new market, propelled by its latest growth engine that yields the double-digit growth. We believe that there are much more to come under this domestic scene of OSP. We forecast OSP functional drink sales to expand by 12% CAGR for the next 5 years as catalyzed from COVID-19 and the trend of health and wellness in Thailand. Further supported by its 470,000 point of sale, 130 years of experience in fast-moving consumer goods, and the fully integrated supply chain that OSP operates, which we believe all are forming synergies that strike upon the success of OSP performance. As seen in all-time high market share of seaweed in the last year. For energy drink, we applied the 2.8% CAGR growth as contributed by the government mega project, which will highlight the need of the workforce and subsequently impose their demand on energy drink. We also observed the market premiumization, tailored to catch higher spending target, like the white collar and female worker, by adding in superior ingredients and revamping packaging. We regard this as the next potential wave of the market, and especially for OSP. In fact, it has already taken the lead and begun market goods for such a group, for example, Lipofine as a lady drink. With OSP core competencies, we believe that the future launches will be securely escorted to meet the eyes of the M Group.
There are OSP stretch out to international scales, especially in Myanmar, a country with high working age populations and high beverage consumptions compared with Cambodia and Laos, where OSP dominate 44% of market shares, with the great brand recognitions such as Shark and M150 among Burmese, in which cultivated by partnership with Loy Hing, the largest manufacturers and local distributor. Furthermore, being the only one among top 3 key players that establish a facility in Myanmar will provide OSP a long-term competitive edge. We believe it will rise market share to 50% in 2026. As a result, we believe that the revenue of energy drink in Myanmar will continue to grow 16% CAGR over the forecast period.
And not only the top line is expected to prosper, but also the bottom line is likewise to be taken to new heights. Based on OSP beverage cost structure, it largely accounts for packaging material, which mainly composed of cullet and natural gas. We anticipate a modest decline in the commodity prices according to the future pricing, which will lower OSP producing costs. Top up with OSP series of cost leading programs. With the latest project, Fast Forward 10X, we analyze the success to come from a historical track of early achieved cost-saving goal, proven company's ability to excel such a project. OSP new furnace will lessen the material required. Lowering the sugar content of OSP drinks would avoid the burden of increase in sugar prices and tariff. And OSP relationship with Nihon is projected to be essential in improving company efficiency through cutting-edge technology. As a result, we anticipate OSP gross margin to expand from 34% to 39% throughout the forecast period.
Our analysis defines the key drivers that drive the recommendation. We believe OSP revenue growth will be catalyzed by a double-digit growth in domestic functional drink and Myanmar energy drink. We forecasted a domestic revenue driven by the government mega projects, the new potential targets, and the health and well-being trend. While our international assumptions are reliant on the settling factory in Myanmar, as well as the association with the Loy Hing. As a result, we forecast a 7% CAGR increase in OSP revenue. We apply the change in cost contribution in respect to our implied decline in commodity prices, further adjusted by the Fast Forward 10X. With the cost-saving program initiated, we believe OSP margins will be increased by 5% roughly in 2026, in comparison to when no cost-cutting program exists. Consequently, this defines a bottom line expansion of a 13.6% CAGR. Ladies and gentlemen, we finally arrived at a buy recommendation of the target price of a 38.75 baht, which represents a 15% upside. Our target price is based on the free cash flow to firm and dividend discount model, which allow us to account for both OSP future growth and its consistent dividend payout. Now, to confirm our valuation, we conduct a forward PE and EV multiples to compare OSP to its soft drink peers with a similar business model as well as the risk exposure. We discovered the undervalue signal from all selected multiples, so we believe OSP trades at a discount to its peers right now.
Now, there are several risks concerned. We focus on the most impactful risks. The price volatility is the nature of commodity price, which affect in discounting 9% from our target price. However, OSP mitigate this risk by optimizing their negotiation powers and minimize the impact by cost-saving program. The next is uncertainty coup in Myanmar, effect in economic downturn and currency depreciations. However, with the economic recovery was a top priority as government prepared for elections in August 2023 to launching over 400 action plans to accelerate job growth. We believe the energy drink consumption will continue to develop. And by having a facility in Myanmar, OSP can source the raw material locally to mitigate the currency fluctuations.
Yes, and to confirm our recommendation, we determine the ESG aspect of OSP to be decently contributable to its sustainability, where each of E, S, and G is mirrored in the business operation. Beginning with the environmental aspect, this reflecting in the improvement in cost structure by reducing in greenhouse gas emission using in manufacturing, for example. Socially, This reflects the business operation into two dimensions, including of the enhancement in top-line growth by using a strategy of customer-centric when it comes to product development, and also the improvement in S&H management by reducing the turnover rate, by reducing the consistent review in their employee treatment. Governance. This reflecting the operational efficiency by having a strong team management and also the internal control effectiveness. Additionally, OSP is outperforming several ESG standards, including ESG 100 Index and a THSI Sustainable Stock. We believe that OSP Venture has prioritized sustainability, which has paved the way for its future success. We therefore reaffirm our buy recommendation based on OSP fundamental strength, a competitive hedge fund facility in Myanmar, and the initiative of cost leaning program. For investors looking for this shot of energy and more than ready to be boosted. Thank you. And we will now take your question.
Can you go through your revenue slide or revenue growth slide? So this looks like a slow growth company in the past, and you're forecasting a faster growth company. What is the risk to that growth? Because it seems like with this upside of just about 16% or so, if that doesn't come true, then it may not have that upside. So just help clarify what is the main driver of that growth. Like you mentioned premiumization, and you mentioned Myanmar, you mentioned a lot of things, but to me this seems like they got big market share, mature company with kind of steady growth. What is the main thing that's going to give us comfort that that growth is going to happen?
We would like to highlight from our analysis point of view that we believe the growth engine that has not yet been reflected in the past is the functional drink. As functional drink has been popularized of lately because due to the COVID-19 and the growing trend of health and wellness in Thailand, we believe with OSP ready capacity, it will be able to capitalize on the perk of this trend, and
so that's good. Functional drink. Help walk me through like what's significantly different in the next year, you know, this year and next year compared to last year, just so I can understand that.
By having a establishment facility in Myanmar that we have just already finished in 2020, this will drive OSP future to be more prosperous, and due to the initiative of cost-saving program that has been just launched this year. This will help OSP and help us believe that there will be growth, prosper, and grow for a 7% CAGR.
Okay.
Hello. Okay. Hello. On Myanmar, can you quantify the downside risk, please?
I'm sorry?
Can you quantify the downside risk related to Myanmar?
In Myanmar, due to our assumption, we see that there are two severity risks and possibility that could happen in Myanmar, which is including of the currency risk and also the uncertainty of coup in Myanmar. And by doing that, we have been determined that the valuation impact of these two will impact our valuation for 5% roughly. Yeah. And that will cause our target price from 38.75% to 36.44% instead. Yeah.
Oh, hello. So what strikes me the most is the margin improvement. You forecast 400 bips improvement in gross profit margin, 500 in EBITDA margin. That is extraordinary. You have to walk through your assumption for me on that. Can you do that? Well, where is this 400, 500 bips of improvement coming from?
To answer your question, we would like to break down into two parts of the cost that contribute to the two margins. So the first one, we would like to elaborate on the cost of goods sold. We forecast that the cost of goods sold will improve significantly from the technology with Nihon will require less material used to produce the pod packaging, like the glass material for OSP, which is composed of the natural gas and the cullet. And also for the cullet part, OSP also has the plan to reuse their cullet in their production. So that will also significantly reduce the amount required on the cost of goods sold. And for the EBITDA margin that you concern, it will be as a result from OSP stepping into more digitalized company. So it will be requiring less manpower. And yes.
Right. So there's two parts in this assumption, right? The first one is within the control of the company, right? Which is basically the use of the newer production technology, reduce of the packaging cost, so on and so forth. The second part is about your assumptions about the commodity price, whether it's oil price, whether it's gas, whether, sugar price as well. So what if that doesn't happen? Is this still a buy? What if the sugar price stay at 18, 19 cents? What if the oil price stay at 80, 90, 100 US dollar per barrel? So are you saying this is a bet on commodity price movement? If the commodity price doesn't come down, will this still be a buy?
We also conduct our scenario in case of this as well, but in our assumption, we have the tendency to believe that the commodity price, like the oil and natural gas, will come down due to it already make a new high in the recent years of the crisis. And we already, in our scenario analysis, we factored the oil price at the time when the subprime crisis happened. So it would have to require for this current situation to be as severe as the subprime to change our recommendation from buy to sell.
So let's just talk about energy prices just for a second. It's possible that energy prices could go up. Let's just say that oil could go up to 150 or 125. Just how sensitive is it? Is it more sensitive to energy prices, or is it more sensitive to sugar, as an example? Like, just help us to understand, if oil prices really shot up, like for instance, here you're saying commodity price surge, what level of oil price or what level of increase in that surge are you talking about when you do your bear case, just so we understand that? Roughly.
We see that the commodity price fluctuation is a more impact to our valuation, but due to the sugar price, it's not that quite big burden compared to the others. But the price, the massive cost for the beverage is mostly rely on the sugar tariff. So the sugar price is not significant. Yeah.
And go ahead.
I have a question about the management. They typically target double-digit top line and bottom line growth. Why are you assuming a different or a lower growth rate?
Could you repeat that again? I'm sorry.
Management normally guides top line, bottom line, double-digit growth, CAGR. Why are your assumptions differ from management?
To recap your question, you are wondering why our forecast may seem a little different than what management should enhance in the margin, like for the top line and also the bottom line.
Management guides publicly that they would target double-digit top line and bottom line growth. Why are you different?
We believe that due to the current market condition may not be that effective and might not be, the OSP might not be able to respond that, or maybe might not be able to acquire that much top line and both bottom line as well. And also the current market condition due to the war, that is might impact the commodity prices that more fluctuated than that. So the aim of the cost saving project that wanted to offset this fluctuation may not that be significant to the company.
Is shifting to the premium product, is that a major impact on revenue, or is it a major impact on margin? Or is it a small thing that will happen over the long term, just so I understand that?
As for our energy drink, we believe that the new potential market would be more of a long-term growth opportunity for OSP, which would uplift its margin enhancement in the product.
Okay, thank you.
Thank you.
Test. Test 1, 2, 3, test.
Hello.
Test 1, 2, 3, test.
Okay, so for team B, you can start whenever you are ready, and we will start the time when you start your presentations.
Despite seeing OSP as one of the blue chip stock in Thailand, the market may still have some doubt over the stock. Some may think it's just another lucky first mover. Some may think that it's a business with limited top line potential. And some may think that it's a stock that earnings have been through its glorious days. As a financial analyst, today we are telling you is the opposite, and that you should buy the stock while it is still undervalued. We are telling you that it's a business with unbreakable strength in branding and distribution. We are telling you that its top line will grow from investment made in Myanmar and CFA. And we are telling you that it's a stock that profit margin will expand from vertical integration. A very good morning. Today we initiate a buy recommendation on OSP stock based on DCF valuation target price of 39.72 baht, representing an 18.6% upside. But before we dive into the detail, let's get to know the company a little better. OSP started off as a small pharmaceutical retailer and later expanded into the energy drink business, where it ascended to the #1 position in Thailand and Myanmar. This results in 70% of the revenue being generated from energy drinks. The leadership in Thailand and Myanmar energy drinks brings in consistent 18 billion baht every year. Now, after winning in the energy drinks, the company further expanded to personal care and functional drinks. In these markets, the company also secured the #1 position. This results in 30% of the revenue being generated from personal care and functional drinks. In functional drinks, CVIT, the vitamin C shot, recently emerged as the main revenue driver. Now, OSP aspires to be more than just a Thai company. In fact, they want to be a listed company that operates above Thai standards. This is why they implemented internal overhaul back in 2016 and equipped the company with management from global FMCGs. The immediate result that we see is an uplift in ESG standards. OSP's ESG standard rank almost on par with the global peers, while performing significantly superior to the domestic peers. So far, this is what the market has known, and there may still be some doubt over the stock. From now on, we'll give you further clarification so that you can buy the stock with confidence.
Today, we tell you that you should buy OSP because you're looking at a business with unbreakable strength from branding and distribution. You're looking at a business with top-line growth potential from Myanmar and CVIT, and that you're looking at a business that the bottom line still expand from vertical integration. Let's start with the first one, the unbreakable strength. Well, in the past few years, the market has shown its maturity in growth. The silver lining for OSP has been the ability to maintain its market share at around 50%. And the doubt here is that whether or not, or will OSP be able to continue as the market leader? And our answer for you today is yes, it will still be the market leader, and that is because of the unbreakable strength. The first strength is the branding. The multi-brand strategy allows OSP to fight with its competitors, having not only the flagship M150, but also a wide selection of well-established brands that make it harder to compete. The second strength is the distribution capability. On the surface level, OSP possesses twice the number of CBG point of sale. And we dig our analysis deeper, and we found out that this number is actually an impossible number for CBG to achieve within a short period of time. And the reason to that is simple. As you can see, the distribution coverage extends throughout Thailand to areas that require a lot of investment and time commitment. And with all of these unbreakable strength, it's been displayed, and as the ability to maintain its market share moving forward, allowing OSP to enjoy the growth the same as the market.
In addition to strong fundamental, OSP has a growth capability in Myanmar and CVIT. First is a strong presence in Myanmar energy drink market, contributing 12% of sales. This market has a robust growth of over 20% CAGR for the last decade. The recent coup may spark the concern, but we believe that the country has a bright future ahead. From our own analysis on military coup around the world, we reveal that household expenditure recover in long term as people need to spend for necessity. We use the criteria on sanction, casualty, year in power. We believe that Myanmar situation is similar to our observation and will follow the same pattern of growth. Second is vitamin C shot and the CVIT. Our global observation reveal a trend of replacing juice with healthier beverages. Thailand is expected to follow the same trends, and vitamin C shot will get the main benefits. As we can see here, that vitamin C shot had a double-digit year-on-year growth for the past 5 years, comparing to small growth or decline in other category. We expect CVIT to continue leading the market as a first mover in 2012, and a recent year faced competition from at least 8 competitors. CVIT still hold the largest market share of 31%, despite selling at a higher price. These demonstrate a strength in branding and customer insight. Moreover, there is more opportunity in the traditional trade sale. Currently, CVIT sold 80% in the modern trade, while M150 and other FMCG mainly use traditional trade channel. We expect OSP to leverage its distribution coverage, expand CVIT into these untapped opportunity. As a result, the top line is expected to grow 6.2% CAGR, or an uplift of 3.3% from a strong domestic energy drink.
Now, the last doubt is on the bottom line. We argue today that the bottom line will expand because of vertical integration. Since IPO, OSP has been focused on trying to save costs. In fact, the cost-saving name changes from Fitnet First to Fit Fast Firm and to Fast Forward 10X for the next 5 to 7 years. And although the company did not disclose in specific details on how they save costs, we went above and beyond and tried to find how these cost initiatives perform. And the result I highlight into 2 points. First is that we always see the outcome, always beat management guidance, and surprise us every analyst meeting. And second is that most of the cost saves are coming from the maintained margin, meaning it prevents the firm from paying out too much cost. Looking into the future, we expect the beat the goal outcome to continue as we foresee a 9% surplus for management guidance by assuming with conservative actions required for OSP to fulfill. And what's even better now is that most of the cost save will come from vertical integration, which is mainly to improve margin, which will positively affect the bottom line. And all of this will result in an uplift of EBIT CAGR from 2% of do-nothing case to 10% with feasible cost-saving plans.
So far, OSP has proven an attractive business. Now let's see whether its stock is at the right price. But before that, we have to understand the business model of OSP first. OSP employs different business model for different product lines. For example, M150 is the brand solely owned under OSP, while CVIT is the brand under joint venture business, house Osotspa Food. Therefore, we decided to use some of the part valuation, dividing OSP into 3 business units: Core, JV House, and JV Taisho. Our DCF sum of the part valuation suggests the target price of 39.72 baht. We decided to use 3-stage FCFF valuation methodology to allow CVIT to reach its maturity stage in the year 2029. Now for the core business, we project the revenue growth to be about 5.3% CAGR, driven by rapid growth of Myanmar energy drink sales and also the expansion to traditional trade sales channel of CVIT. We also project the cost-saving project to bump up gross profit margin to 36.1% and EBIT margin to 17.4% in the year 2026. Now, for JV House, we project the revenue to be growing at 13% CAGR, driven by expansion to traditional trade sales channel and the increase in consumption of vitamin C shot. For JV Taisho, we expect the revenue to be growing at 3% CAGR, driven by stable market share at home and also the marginal growth in domestic energy drink market. Now, to confirm our DCF valuation, we benchmarked the firm forward PE and PEG ratios with the peers. Both the ratios suggest that the stock is undervalued.
Now, moving on to the risks part. After assessing the downside risks, we would like to mention 2 things. First, how does OSP react to the most serious threat that it could not adjust the sugar content? And second, how the other 2 risks, which are the market growth and the market share, affect the target price? So, for the first question, even though a failure to adjust the sugar content leads to a large impact on the target price, OSP could adjust these by increasing the wholesaling price or increasing the price per volume. Next, we conduct a scenario analysis to account for the other 2 risks, which are the market growth and the market share, leading to 38% upside in the best case and 9% downside in the worst case, which is highly unlikely. We therefore confirmed our buy recommendation based on unbreakable strength, top-line growth, and profit margin expansion. Thank you for your attention, and now the floor is open for Q&A.
Can you go to your revenue chart, the long-term revenue, just so I can see that? So basically what I see here is that you're saying that the CAGR is going to double from 2.7 to 5.3. So for what is, let's say Myanmar and Thailand are large markets, and the market share is pretty strong in those markets. I just find it difficult to see how it's going to go from 2.7 to 5.3. What would you say is the number 1 driver of that revenue growth? Not cost, not margin, just that revenue.
So the number 1 cause of the double in CAGR is from Myanmar growth. So we see that Myanmar has a lot of potential to grow in the future. If Myanmar consumption of energy drink per capita has a long way to go, and they have all the necessary drivers to grow.
Okay. Good answer. And the next question is, doesn't the market already see that? Don't investors already see that? Or what are they missing about that?
So I would like to address that question. I think we have already mentioned some of the doubts the market may have. Is that the first one is certainly the political unrest in Myanmar. And that is the main driver to how people assess or people view the Myanmar market as a disruption in the short term. They may not realize the long-term benefit gains that OSP may have. And the second is that the complication between the distribution capability for them, for OSP, to export into Myanmar, and also the foreign currency.
So let's follow that up. This will be my last one. Just that what you're saying, I think, what you're saying is that if I invest following your recommendation, I'm also making a bet that there's going to be there's either going to be political stability, or the political instability isn't going to impact the sales that much. And this is really the key difference between you and the market. Is that true?
Yes, that's correct.
Okay, thank you.
On Myanmar, can you quantify what is the impact of a depreciation of the currency?
Okay, so your question is around the impact of foreign currency. And sorry that we did not go in details on how, in specific numbers, on how they accounted for all of those impacts. But just to give you a big picture of the overview of how they categorize costs. So right now they are categorized as an export. So it will be onto it's going to be the intercompany transaction. In that sense, it will be entered into the profit and loss of the company. But right now, what they're trying to do is to increase the share in the Myanmar market, establish a factory, and that one will be categorized as a profit and loss in OCI. So that one will be an immunity for OSP as well in the end result.
Can you go back to the slide on the core energy drinks in Thailand? So what I want to hear from you is what is the underlying assumption here regarding the price increase and the volume growth under the context that Thailand is entering into a rapid aging society, and energy drink is definitely positively correlated with the size of your working class population, right, which is going down rapidly. So obviously, you have to explain it to me here. That what's the assumption behind that here?
So our underlying assumption in the forecast here is that we see that the market has reached the maturity for quite a long time. So we project the market does not only grow moderately, and the company's strength leads to the position of the market share being maintained throughout the next 5 years.
So do you forecast price increase or not? That is the question.
The price increase of the M150 or the entering, we do not account for the price increase because we believe that with OSP capability in cost management and vertical integrations, they are able to maintain the cost and able to maintain the price of selling energy drink.
So zero. Everything comes from the volume.
Yes.
Okay.
Which this chart again presents us with another issue where you're going from a CAGR of a slow growth CAGR to a fast growth business. And now you've told us without significant price rises, and that's Thailand. Can you give us some comfort that that's going to be able to be hit? Because that's, even though it's a small number, it's still a pretty significant increase. It just goes up and up and up. I mean, these guys are really knocking it out of the park. But are they? Look at 2021, look at 2020 and before that. So just help us understand this.
Yeah, sure. So I think it's obviously okay for you to question the growth in the past, but let me remind you that around 2020 is around the disruption in COVID-19 situation, and that resulted in a close down in traditional trade sales, and that is what has disrupted the market. So we see this as an outlier of the growth. And if we project,
And there was no recovery in 2021? Also, it was hit just as hard as 2020, it looks like, right? So you haven't seen any recovery yet?
Okay, so as in a market perspective, yes, it hasn't seen any recovery, but OSP, I think yesterday OSP has already announced the year 2021 in summary of the financial, and it says it pronounced that we are having a better than the market situation. So we see that as a strength of the company that can beat the market situation that hasn't recovered yet. And in the long term, as we mentioned, that it will go along the same line with the market, which is really a conservative way already.
Sorry, but you talk about the price increase that the company recently announced, but you did not assume that in your forecast, right? Just to be clear.
Okay.
So basically you assume constant market share, no price increase. So everything will basically go with the industry, and you assume that the industry will recover and go back to 3% plus minus range.
Yes.
Okay.
I think, may I clarify maybe some of the thoughts that might have from the recent announcement for OSP. It announced that it will increase the price from 10 baht to 12 baht. And allow me to clarify that yesterday we also listened to the opportunity days, and they suggest that the 12 baht model will be another product line add up to the 10 baht. So that is the reason why we still think that our valuation still stand at the end of the day.
For your assumptions, what will make you change your current buy recommendation? What assumptions would have to change?
So the assumptions has a variety to include. So first thing is maybe the cost-cutting initiative that we expect that OSP could do, that meeting that goal. So if they are not able to implement this cost-cutting initiative and the margins stay the same, we will change our recommendation from a buy to hold recommendations.
Another to that is also the Myanmar market. So if we expect the Myanmar market to stay the same with zero growth whatsoever, it will also change our recommendation from buy to hold.
You mentioned about the importance of vertical integration, but I have to admit that there was a lot of information on the slide, so I didn't understand it completely. What is the key vertical integration?
Okay, thank you that you asked that question. So vertical integration means that it consolidates the supply chain. So meaning the margins that might have been paid to supplier, it will be as a margin in-house.
What area are they going into?
So they are implementing, actually in the next quarter, we will see the result of an opening of glass bottling facility in Myanmar. So that one is the key driver of the margins.
That is the main vertical integration issue,
Yep.
Not sugar or something like that?
Yep.
Okay. Also, another question, why did they do CVIT as a JV? Since we just got probably 20 seconds, just to give me a...
So actually it's a strategy that OSP use so that they can use branding, technology, and also customer insight. So this means that they have a quick time route to market, and also they can share downside risk with their partner parties.
Thank you.
Thank you. Thank you.
Okay, so thank you Team A and Team B. So now we'll have a short break for 10 minutes and we will come back after that. Thank you, Khap. Okay, so please welcome Team C to set up the presentation now, Khap. So you can start whenever you are ready, and we will start the time when you start presenting.
Without a doubt, when someone talks about energy drinks, one must have thought of M150. What about vitamin C drinks? Seaweed. Being a top line brand for multiple industries, Osotspa is a force to be reckoned with. Good morning, honorable judges. We are Team C, and we are here to recommend a buy for Osotspa using a DCF-based target price of 38.75 baht, representing a 17% upside. We believe the market has underappreciated the following three key aspects. First, its strong portfolio to generate cash cow return. Second, its leading Myanmar position, enhancing firm's growth. Last, fully integrated value chain, diminishing expenses. Before we take a deeper look into each aspect, let's take a step back and get to know Osotspa more. Osotspa is one of the largest food and beverage firms, providing over 25 brands in various industries, and operate in 38 other countries, where most of its products are entirely produced and distributed by the firm. In 2020, the firm generated over 26 billion baht, where 14% of the revenue came from the international market. If separated by segment, the firm can be categorized into 4 categories. First, and contributing to the most, is energy drinks, with brands like M150, followed by functional drinks with Seaweed, and personal care with Baby Mouth and the others. Now, my colleague will elaborate further on the portfolio and its implication.
Competing with Katinda and Carabao Dang in Thai energy drink market, Osotspa is a market leader, covering over 55% of the market share, where 38% come from M150. This naturally leads to the firm revenue being driven by M150 with an estimated revenue of 9.8 billion baht, or 45% of the firm's total revenue. Going forward, we believe that M150 main driver is the consumption of blue-collar workers, along with the ability to capture the ongoing health and wellness trend by lowering the sugar content in its product. As a result, we believe that M150 will show a steady growth of 2.2% over the next 6 years. This health and wellness trend allows other products to play more important roles in the firm's total revenue. With a market growth of 3.8%, we believe that Osotspa will be able to capture this emerging trend with other product lines as well, including zero sugar confectionery, no sugar energy drink, and organic soap. The most notable to capture this trend is Seaweed. In combination with the past success of capturing the target customer of the functional drink market, we believe that Seaweed revenue will grow by 12.7% over the next 6 years. With the growth from other brands in the firm portfolio, we believe that Osotspa will be more diversified, with functional drink to play a more important role in the firm's total revenue, decreasing a risk of being too dependent on M150.
On top of the attractive return from domestic revenue, we believe the market undervalues Osotspa Myanmar business that will capture growth in the recovery period. Myanmar is the main focus of international country, representing 65% of international revenues. We believe Myanmar will be the success of Osotspa due to its product market fit with local production facility and Myanmar's long-term economic growth. Myanmar's people consume energy drink as a refreshment and prefer Thai brand as it looks more premium. To solve this market gap, Osotspa penetrated by Shark as a premium brand, targeting new generation and white-collar worker, then successfully become number 1 in the market. Then Osotspa also covered mass by using M150. Overall, Osotspa achieved to be a market leader, competing in this landscape with other Thai brands. While other competitors are exporting, Osotspa strengthened its position by having local production facility, giving the advantages of better cost management, leading to sustainable profit, flexibility in response to change in demand, and operational resilience through market uncertainties. Despite the market concern over the situation in Myanmar from coup and COVID-19, we expect to see the recovery. The World Bank expects 1% growth in the whole economy from the signs of economic stabilizations, and now the Thai currency is stabilizing as well. Following the crisis, we see Myanmar as an expanding market in the long run, from the well-placed location and infrastructure investment. Overall, we believe that Osotspa will survive better in Myanmar crisis and have a strong foundation for post-crisis. So we expect 8.8% growth in its top line and 10.6% growth in its bottom line.
Coming to our last key rationale, we believe Osotspa would utilize its fully integrated value chain, maximizing margin. Osotspa has the ability to control all the activities in the beverage segment, from sourcing of goods to distributing to customers. In the past, this strength leads to Osotspa being able to develop a cost control initiatives like Phatra, being able to save almost 3 billion baht through first, redesigning the thickness and recycling glass bottles, saving material costs. Second, reformulating beverages to contain less sugar content, cutting down on major sugar tax. Now, without stopping, Osotspa has launched the next cost control initiatives, Fast Forward 10X, to further offset the increase in the commodity cost from the inflation rate of 1.7% this year and the to-be increased sugar tax costs. Given the past capability, we believe that Osotspa would be able to achieve its targeted cost saving of 5 billion baht within the next 5 to 7 years.
After translating these key rationales into our financials, we projected Osotspa's total revenue to grow at 5.5% over the next 6 years, driven by extensive portfolio to capture market trends and expand its customer base. And Myanmar sales are set to recover from 2023 onwards from economic stabilization and capacity to be exploited. We also expect costs to stabilize quickly after the pandemic, driven by its cost control initiatives of Fast Forward 10X to reduce costs down to SG&A, which will expand its EBITDA margin to 24%. Previously, the company has heavily invested in its CapEx to expand the capacity of beverage filling plants, cullet treatments, and recycling center. And despite those huge investments, Osotspa is still able to maintain a healthy leverage with a DE ratio of 0.4 times, signifying that there's still plenty of room for Osotspa to gear up for future expansion. After all, we expect the expansion in ROE to 27.2%, driven by cost control, asset utilization, and healthy financial position. With the expected EPS growth of 9% and the ability of Osotspa to pay out these earnings to shareholders, we then expect Osotspa DPS to reach 1.7 baht by 2027. Additional assumptions regarding discount rates and terminal growth rates are used to arrive at the DCF base target price of 38.75 baht. Along with the expected DPS in 2022 of 1.13 baht, the total return to shareholders sums up to 20%. With our buy recommendation, we further conducted a relative valuation where we include peers who operated in the business of energy drinks. Thus, with forward PE and forward EV/EBITDA, it shows that Osotspa is in fact trading in line with its peers, reconfirming our recommendation.
We have additionally identified a few investment risks to our recommendation, and we would like to analyze the two largest risks being: first, the increase in commodity costs, and second, the Myanmar's operation. With the recent increase in commodity costs, the increase in import prices along with the global supply shortage could develop into the risk if Osotspa is unable to strategically source and lock in the price. Thus, we have incorporated to the EBITDA margin calculation, showing the downside risk to the valuation of 3.9 to 7.7% from the target price. Because Myanmar has a lot of uncertainty, therefore, we incorporate this to the risk that the Myanmar situation will be worsened with the coup and stuff, resulting in the close down of stores and more than half of the poverty higher proportion in poverty. And this result in the valuation impact of the downside risk of 3.2 to 8.4%. Moreover, Osotspa has done a lot towards sustainability. First, it has the recycling center, which lowered the waste. And second, it has the She Vision Zero, which increased the training, resulting in the 10% reduction in the workplace accident. And three, Osotspa has the highly independent board and committee, which ensure transparency in management and control. And apart from those three policies, Osotspa has many more policies implemented in place in order to ensure that the company has reached the sustainability goal. And with this policy in place, the Osotspa has the lowest sustainability risk in line with the competitor. And in conclusion, Osotspa, being the cash cow firm supported by the strong portfolio coupled with the Myanmar's growth potential and the decent cost control, solidify our buy recommendation that this is Osotspa's time, Osotspa's period to enhance the growth. Thank you for your time, and we are now open to
the floor to Q&A. Sorry, thank you.
I have two questions. The first one is, in some ways, this story is a pretty easy to understand story, right? It's got good market share, good product, expanding to Myanmar. We understand sugar costs and all that. So is there something that you've seen in your research that you think the market doesn't see that clearly, and that's the reason why you think there's an upside that the market doesn't see? Give us some insight, because I know you guys have spent a lot of time on it, just like the other teams. That's my first question, so go ahead with that.
So from our models, we believe that we expect a better recovery than the market in terms of Myanmar performance, because people underestimate the ability of Osotspa to thrive in the coup and COVID situation. And thus, yes, it impacts a lot of the Myanmar situation where there's close down of stores and there's people coming out to protest. And we expect the recovery from 2023 onwards with the signs of stabilization. And thus, with that expectations, it leads to an upside potential for Osotspa to capture the Myanmar market.
So then, in some ways, it's a little bit of an event risk, right? It's different from, let's say, a vertical integration where they take over and they start doing glass or something like that, where we can kind of estimate. But here, it really is a function of whether you guys, in your more positive assessment than the market, have some knowledge that other people don't see. And that's a tough question, but the question really is there something that you've seen about the Myanmar situation? You've identified the Myanmar situation. Is there something about it that you think, hey, it was more resilient or something like that as far as sales were concerned?
Thank you for the question. I would like to elaborate on it. From the Myanmar perspective, we think that the market exaggerated the downside impact in Myanmar because of, can we go to another slide? Yes. And this slide shows that even in the coup crisis, the Myanmar economy is still supported by the foreign investment. Even in the Myanmar crisis, we see a little bit slightly decrease in the foreign investment, and 70% of Japanese investors will maintain or even expand their operation in Myanmar, even in the coup crisis. This is a survey from the JETRO. So
okay.
We think.
Okay. And just one other, can you show your free cash flow? Do you have that chart on that? So what I'm concerned about is that you showed a CapEx chart that they did a big CapEx, and then your CapEx kind of went down. And it's nice to think that your CapEx is going to go down, but the reality is that as you're doing business and you're expanding your revenue, you've got to have more CapEx. Here you have a CapEx assumption from 2022 of 2,334 to even down by the time we're at 2027 at 2,297. That would imply that your free cash flow could be a little overstated if that CapEx turns out to be higher. What gives you comfort that this CapEx is going to be flat for the next 5 years? That's my last question.
So from our forecast, we believe that Osotspa has heavily invested in its CapEx in the past 3 years, which resulted in higher PPE from around 8,000 to 10,000, over 10,000 million baht, and thus that shows that Osotspa still have available headroom capacity for Osotspa to produce more and experience growth in that capacity. Thus we believe that in the next few years, what Osotspa will focus more is on the digitalization and more on investing in digitalization to make the process more efficiency instead of investing in expanding its capacity of facility or in the plants. Yeah.
You have a slide for energy drink CAGR of 2.2%. I think that's Thailand. Why are you assuming 2.2 given the market fell for the past 2 years and the market sees energy drink as X growth or mature?
So thank you for your question, and I would like to elaborate more on a little bit about industry of energy drinks. In the past 2 years, yes, energy drinks in fact experienced a contraction, and that is mainly due to the COVID-19 effects on the blue segment callers, where they have lesser income to purchase on M150. And thus we believe that those impacts on the blue collar workers will be short terms. And thus in the future we expect the recovery from 2022 onwards, making the growth in industry.
Right, I'll stick to this slide. So basically this 2.24%, what's the breakdown between the growth from the price increase and the growth from the volume?
I would like to take on that question, Kap. So with our analysis, we believe that we were referring, this model refer to the Q3 of last year. Therefore, this has not taken into account the increase in price yet. However, we do believe that with the product expansion of launching the 12 baht M150, it would cause this margin to be even further, even solidifying our buy recommendation even more. However, to answer your question about the 2.24%, we believe that there would be more consumption in the blue-collar workers due to more construction sites being opened up.
So they'll work more, so they'll drink more. The amount of drinkers is the same, but maybe they'll drink 2 bottles more per day.
To clarify the question, the amount of blue collars will slightly expand in terms of the blue collar consumption workers. The amount will slightly expand from those who have not yet consumed to translating to sometimes consumed, and then increasing also the portion of those who consume frequently. Thus, overall, we see that these 3 groups of consumers will increase their consumptions and leading to a higher consumption average per capita.
Okay, thank you. My second question is this: why do you think the price of this product stay the same for 37 years?
I would like to answer that question. Thank you very much, Kap. So the reason that the market has stayed at 10 baht for so long is because of how each competitors was competing very fiercely in the energy drink market, that they are forced to maintain at 10 baht price point. However, there is a recent change in the industry with Osotspa launching a black Galingale product line with 12 baht price point proved to be a success to them, which solidified that decision to launch the new product of M150 with 12 baht. And we also believe that with this move would make the industry to move towards 12 baht to become the new mass price point for energy drink market.
I would like to add on to that question. Like the way that they stay into that price for so long because of the main target group is the blue collar worker, so they are price sensitive person, so it's hard to increase the price. And it is a competitive market, so it's better to stay that way.
Do you think there's a clear correlation between minimum wage in Thailand and the growth of this kind of product? And given the fact that the minimum wage in Thailand has been basically flat over the past 5 years, that is explained why this market, this core business of Osotspa become X growth. And do you think if in the futures there is no change in the policy about the minimum wage, do you think you can expect a 2-3% kind of growth, or it will be flat or even negative because working population is decreasing?
Thank you for the question. That was a really great question, and I would like to answer that. So we believe that in the past, we believe that minimum wage would be highly correlated to the 10 baht price point. So, and with the current trend of the 12 baht products in the Kaplan Schweser and the 12 baht M150, we believe that the industry is moving towards a new trend where the product is not simply for blue collar worker anymore, and it would move towards like higher income consumers now.
Can you go to your ROE slide? You're going to only have about 15 seconds to answer this question, but that's a big jump from 17 to 27, coming mainly from net profit margin. How confident are you in that? I mean, that's huge. 27 is a big number.
So for net profit margin, because 2021 is expected to be a highly downward pressure on the cost side, thus we believe that the cost will eventually stabilize and eventually leads to the gross margin that will increase, as well as Osotspa is trying to reduce costs in terms of with their fast forward projects to improve efficiency. Thank you.
So you can start whenever you are ready, and we will start the times when you begin presenting.
Thai people might be familiar with these products: M150, Seaweed, Peptine Baby Mart, and 12 Plus. All of these belong to Osotspa, the company that has been around Thai people for 130 years and stand in a leading position in many markets. Good morning, distinguished audience. Today, we place a buy recommendation on the OSP stock at the target price of 39.5 baht with 10.5% upside. The revenue is break down into three categories, which beverage is taken for 84% of total, following by personal care products and other. Not only Thailand, OSP expand their products into 39 countries, especially the neighboring countries of Thailand. So, why buy OSP? With the great growth opportunity, resilient strategy, excellent financial performance, active ESG integration, and target achievability.
The first key value driver, growth opportunity after pandemic. OSP business are affected by several economic indicators, and these indicators are expected to grow in the future, and here's why. First of all, Thai economy shows a strong sign of recovery due to the improving situation of COVID-19. As a result, the business activities start to resume to the normal level. Also, the approval of infrastructure project by Thai government would create more jobs for blue-collar workers, which are the major consumer group of the energy drink market. Moreover, we observe that Thai people are becoming more health conscious, which is reflected by the higher sales of healthy and food beverage and the fitness gadget. For this reason, the vitamin C drink market is expected to see a growth of 16.4% CAGR by 2025. Moving on to international market, Myanmar energy drink industry has high potential growth and is expected to grow at 4.3% CAGR in 5 years. And Osotspa, as a market leader in Myanmar, has high potential to capture this opportunity.
The second key value driver, being the market leader, having a such strong branding, driven by multi-brand with the tier pricing strategy, enable OSP to mitigate a concentration risk as a conglomerate growth diversification strategy. OSP can cover stores up to 97%, which is higher than the main competitor, and they also emphasize on strategic partnership with the regional player, enabling OSP to maintain a leading position in the market. OSP is based in cost management with a full control of production, starting with recycle center, down to leveraging distribution platform, vending machine. Moreover, the company also plans to continue cost-saving program with a clear target of 5,000 million baht over the next 5 to 7 years. And this is supported by historical success from the two phases of cost-saving program, enable OSP to enhance its profitability over the year. Not only that, we observe potential upside from the new key value driver this coming year. CPD products is driven by an excellent research and development team. We believe that the company will be able to capture this marketing opportunity. All these drivers, the company should be the number one in this industry.
The third key value driver, excellent financial performance with a rising ROE value in the next 5 years, starting with profitability. Revenue of OSP is expected to grow at 5.5% 5-year CAGR, mainly driven by sales from functional drinks, international energy drinks, and sales recovery from personal care. Higher EBITDA margin is supported by product reformulation and cost-saving program, and net profit margin is high cost benefit gain from profit sharing. Moreover, rising ROE value is supported by an ability to utilize assets to generate higher sales, along with a strong balance sheet and healthy debt profile. OSP has more room to gear up to capture inorganic growth opportunities. We believe that OSP can maximize shareholder wealth with a double-digit growth of EPS in the next year. And the fourth key value driver, strong sustainability roadmap integrated into core business strategy, including day-to-day operation. OSP has the most concrete ESG vision, indicating in higher ESG score than the main competitors. Environmentally, OSP increased the use of carbon offset, which is solar rooftop. As a result, OSP can reduce 12,000 tons of carbon equivalent in 2020. Socially, OSP reports zero fatalities for 3 consecutive years and regularly access its business partner with ESG qualification. Moreover, excellent rating CG score from IOD and team assessment using CFA criteria show high standard from running the company. All of this confirmed by being a member in 3 ESG index. As a consequence of great performance from ESG, we believe that OSP can deliver the best value to its shareholder with a premium from its target price of 3.1 baht from enlargement of its revenue and reduction of VAT based on past study. This is why OSP is the great company with sustainability, continuing to attract ESG conscious investors and expose them to smaller ESG risks. After we know OSP is the great company, is this a good investment?
Yes, we consider OSP as a good investment, supported by averaging 55-45 of the DCF with EV/EBITDA multiple to get the target price. Let's start with the DCF. We broke down the revenue into 3 businesses, including beverage, personal care, and OEM and others, where under the beverage, we divide the revenue into Thailand, Cambodia, Laos, Myanmar, Indonesia, and others, and we forecast each product brand under each category separately. For example, we project the revenue of the beverage by forecasting the market size using the regression, adjust with the industry research, and evaluating the market share of each brand based on a team survey and a CPM metric to come up with the sales volume. Then we multiply the sales volume by the price per unit of each product to get the revenue of each product brand under each business category. Additionally, we integrated the key value drivers and story into all key variables, such as incorporating the fast forward 10x into the cost of goods sold and operating expenses. We also apply moving back by assuming the debt to equity ratio to move up toward its peer average at 0.11 times, and we align with the DCF value of 40.9 baht. Another 45%, we use EV/EBITDA multiple to get the relative price of 37.5 baht. After weighting both valuation, we got the target price at 39.5 baht with 10.5% upside. To support our valuation, we compare OSP EV/EBITDA with its historical and peer average. Both indicate that OSP stock is undervalued, and this is the right entry point to buy OSP. In addition, the maximum drawdown has been recovered the fastest among peers during the pandemic due to its earning cushion from a strong core business valuation and brand positioning as a market leader.
Amid the good story, we've conducted the risk assessment where we highlight on 3 key risk factors, starting with the government lockdown. According to the past, the government will consider to lock down with the number of serious case hikes to 4,000 cases, but currently is at 800 cases with a success in vaccination program. So this could be unlikely to happen despite an Omicron. Next, fluctuation in raw material price with an extreme case resulting in sale recommendation. However, the impact should be reduced due to the product reformulation and the lighter weight bottles. For the political unrest in Myanmar, there is a lot of cushion. The revenue from Myanmar has to decrease by 40.2% to change our buy recommendation to sell. To complete our analysis, we ran 100,000 times of simulation, suggesting 65% support our buy recommendation. With all of this, we can affirm that OSP is a great company, so we issue a buy recommendation at the target price of 39.5 baht with 10.5% upside. Ladies and gentlemen, this is the right time to drink up the upside with OSP. Thank you, and now the floor is open for Q&A sessions.
So the story, as I see it, is you're forecasting 11% EPS growth roughly, and CAGR of about 6%. Let's say 5.5, but let's say 6% CAGR, 11% upside average growth. This is not a fast-growing company, so already 6% is a pretty high number for revenue growth, and getting to an 11% CAGR for EPS also means, a significant margin expansion. So what I would like you to explain is just the number one thing that's causing that revenue growth and the number one thing that's causing that margin improvement, just because you've presented a lot of stuff, but what does it boil down to?
Thank you for the question, Dr. Andel. Let me answer this question. Since the company has a multi-brand strategy with the ability to leveraging premiumization, and this is why profit margin has been enhancement. Not only that, the company also continue cost-saving program, either to mitigate the fluctuating raw material along with the applying the common model. All this.
So you got to be more specific. Just be simple and specific. For the revenue, what is the main thing?
The ability to leveraging premiumization to the customer.
So premiumization, that's a hard word for me to say. So that's kind of the key thing for the growth. Okay, and then for cost, what's the key thing for the cost improvements?
For the key thing for the cost improvement is the continued cost saving program, and this also supported by fully integrated supply chains.
So with the fully integrated supply chain, that reduces sugar costs, that reduces, what is the number one cost that you think is going to come down? Because I saw that they say 10x, right, like cost reduction. What is the number one cost that you think is going to come down over the next 5 years?
The cost of goods sold is the number one that can improve the profitability. Since for the fast forward 10x, the objective of them is to lighter their weight bottles, which can mitigate the increase in the price.
So let me ask, since they've already vertically integrated into bottles, I'm assuming most of the gain is already there from the cost from that. Is it bottles that's going to be the number one cost reducer, or is it sugar, or is it distribution, or just that's what I'm trying to get to?
Okay. Thank you for the question.
You're welcome.
Yeah, but the sugar price will be like the number one that company can be reduced due to that the management guidance have planned to reduce the amount of sugar of every product in the beverage category and also half of the product in the healthcare and confectionery categories.
Okay, thank you.
On the environment, what is the biggest environmental risk, and what is your view on this risk?
Thank you for Thank you for the question. We view the risk of environmental is the climate change, as the OSP has integrated a sustainable value chain, which is OSP has currently installed solar rooftop. This enables OSP to reduce the energy consumption and fight against the climate change.
What is your view on water supply?
As currently OSP targets to reduce water consumption by 40%. This will enable OSP to enhance profitability by 6% in the next 5 years.
Well, since we're talking about ESG, I think you have one interesting slide. Can you go back to the, yes, this one. Can you move a little bit? So the WACC has been decreased because of the ESG premium, right? And you decrease it by, I don't know, roughly around 60 bips, I think. So do you have an evidence to back this up? How do you come up with this 60 bips? You know, because 60 bip decrease in the discount rate is a lot in terms of the impact to the overall valuations, right?
Thank you for the question. We based on the past study, which is ASEAN Journal on the topic of CG and WACC. And they said that the company that has the good CG score can reduce the risk of the company and further reduce the WACC of the company. And OSP enabled to reduce the WACC by 7.9%. This mainly come from, first, CEO of the OSP is not the same person as the chairman. And moreover, independent director had reached the target of regulation, which is more than 1/3 of requirement.
Okay. And you also, still about the WACC, right? I think you use moving average WACC, right? That is interesting, right? But can you go back to that slide? The WACC slide? I noticed, I like the fact that you're using the moving back, but you have to explain it to me. Why is it coming down when the whole world is expecting the interest rate to go up, right? I think they expect 4 to 6 hike in 2022 alone, but you're expecting it going all the way down for the next 10 years. Can you explain that to me?
Thank you for the question. For the interest rate, our interest rate is the real effective interest rate for OSP, which is at 2.5% for long-term interest rate. And as you can see from the slide, that the interest rate have go down since the tax rate of OSP is increased, since we believe that OSP cannot gain the tax benefit in the long run.
On natural gas price, what are your assumptions and why?
So, thank you for the question. So mainly the Ukraine and Russia crisis affect the raw material price in over the world, and Russia is the main producer of the natural gas, and therefore we state the 3 main key risk factors, which are the increasing, which the most impact one is the natural gas, because OSP has a large proportion of natural gas. But however, we run the stress test, and it shows that the natural gas have to increase by 57% in order to change our buy recommendation to sales. But it's currently increasing at only 10%. So we believe that the impact to OSP would be low.
What is your view on the gas price? Or what are you assuming in your models?
For the natural gas price, we use the base case, which tends to increase by 2.6%. Moreover, like currently there is a Russia and Ukraine conflict, which increase the natural gas price.
I just want to go back to the WACC and the ESG. You showed a research report, which I tried to take a picture of to see the date of that. When did that report come out, roughly? I couldn't read the date on that report.
The data is released on 2015.
2015.
Yes.
So my concern is that you're adjusting the WACC based upon a research report that came out 7 years ago, and there's a lot of awareness on ESG. So my question to you is, when you lower the WACC like that, isn't that already in the market, or is the market, they need to come down to that lower WACC? That's my one concern about that.
Thank you for the question. We estimate this WACC to reduce as a factor that market doesn't see. And this is the opportunity for OSP to grow as sustainable and long-term growth.
What is your cost of equity?
For the cost of equity is around 8 to 8.2%.
And then the cost of debt you're saying is 2.8?
2.5%.
2.5? And that's another question, that with that WACC going down, now I think the WACC falling is actually pretty small amount, but still, what's the risk of, you're saying it's going to have higher leverage, what's the risk of interest rates rising? Will that have much of an impact or not much?
Thank you for the question. For the interest rate, even though there's the trend that Fed gonna increase the interest rate,
okay, so thank you, Team D, for the presentations. So now our team have presented their presentations, and we are going to finalize the total score received from the judges. We will announce the winners and begin our award ceremonies about 15 minutes from now. So we have a short break for that. And for the participating students, please come back about 5 minutes before the scheduled time in order to receive the instruction about to receiving award on the stage. Thank you. Okay, Honorable judges, ladies and gentlemen, now this is the last sessions for the CFA Research Challenge final round. First, on behalf of the CFA Research Challenge team, I would like to congratulate all teams for all your hard work over the past 5 months. 5 months is definitely a long period to be in the competitions. Staying focused, managing between study, work, and research challenge is not an easy task. There were teams who gave up before. However, this year, we are in place that all teams have completed the research and submitted the quality report to us. We really hope that this challenge is a learning and maybe a self-discovering experience for all of you. So, before we announce our winners, please join me in welcoming the President of CFA Society Thailand to give us a speech and trophy. So please welcome Khun Win Prompat Khap.
distinguished judges, university professors, participants, ladies and gentlemen, today marks the 13th year of CFA Institute Research Challenge in Thailand. And on behalf of CFA Society Thailand, we are proud to host 14 teams from 11 leading universities participating. The presentation that you have here today were the combination of 5 months of research, interviews with company management, clients, and presentation training. With many obstacles along the way, especially during the pandemic, we have to change a few competition processes, but all of you are still able to adapt and follow through. Today, we witnessed your best work on analysis and buy, sell, hold recommendation on Osotspa to a panel of distinguished judges from investment community. Regardless of the result today, be proud to the fact that you have the power to rise above any situation and deliver the best results no matter the circumstances. I hope what you experienced during this research challenge in the past 5 months offer you a glimpse of the financial industry and your future career. I wish you all good luck and continue to achieve what you aim for in the future. We are looking forward to seeing you becoming a professional in our industry and maybe joining the CFA Institute network by becoming CFA charter holders. I wish to express my sincere gratitude and appreciation to our CFA charter holders who volunteer as mentors, graders, and judges to support this competition, including our research challenge chairperson, Kun Not Pasuvut, and organizer Kun Mavi, and staff who successfully coordinated and executed this year-long competition. Thank you, Kap.
Thank you, Kun Rin, for your inspiring speech. Next, it is the time that all teams are waiting for. We will first announce the 2 finalists, which equivalent to the second runner-ups, and then we will announce the first runner-ups and the winning teams. So now, the 2 finalists are Team A, Chiang Mai University BBA Program, and Team B, Thammasat University BBA International Program Club. So, please welcome Team A, Chiang Mai University to come up on stage and receive the award from Kun Win Club. Congratulations, Team A, and now Team B, please come up on stage, Club. Congratulations ครับทีม B Okay ครับ So now it is the time to announce the winner of the research challenge. But before that, I would say that the score result is really close. The gap difference between the score is in the decimal level. And with the considerations of the score ranking and absolute score, we are now having the final result. So I will announce this year's winning team, so the other team will be the first runner-up. And the winning team of the CFA Research Challenge for the year 2021 to 2022 is Team C, Chulalongkorn University BBA program. Congratulations. So, the first runner-up will go to Team B, Assumption University BBA program. Congratulations. So Team B, please come up on stage ครับ Congratulations ครับ Team B So now, please give another round of applause to our winning team again from Chulalongkorn University's Bachelor of Business Administration program. Please come up on stage ครับ
ค
Congratulations, Chulalongkorn University, the winner of the CFA Research Challenge in Thailand 2021 and 22. Congratulations ครับ
On behalf of CFA Society Thailand, I would like to invite our chairperson of Research Challenge in Thailand to present a token of appreciation to our judge. Please welcome คุณพัสุวุฒิ วิไลนิรันดร์ค่ะ We would like to thank you, our judge, for sharing useful feedback and asking challenging questions with our contestants today. Everyone, please join me in welcoming our judge onto the stage. Have a group photo with all teams. So please come to the stage, one team at a time. So let's start with two second runner up first. Please come.แล้วขอเรียนเชิญคุณวินค่ะ ขอเรียนเชิญอาจารย์จากทุกทีมเลยนะคะเชิญเลยค่ะ runner-up, please go onto the stage. of our program today. To keep updated with all of our events, please follow us on CFA Society Thailand and CFA Institute Research Challenge Facebook page. Thank you all for watching, and we hope that you all have enjoyed our research challenge today. Hope to see you all next year again. Thank you.